Good day traders, this is Stefanos on behalf of Tixee, and in today's video we'll be giving an outlook of the market for the week of the 7th of January until the 11th of January. Now, as always, before we get started, please know that all of the ideas discussed in this webinar are my own opinions and do not make up for any form of investment or trading advice, neither any recommendations to buy or sell. You should always do your own research and due diligence before buying or selling any securities, financial products, or instruments, or whether you use any kind of trading strategies. Any information that relates to past performance is not indicative of future results. Now, as we mentioned in the previous look back video, the week ahead will again be one to watch out for as far as stocks and the current Q4 earnings season. Last week we had Google, Meta platforms, which was formerly known as Facebook, and Amazon reporting their numbers. And some of the big names for this week will be Disney, Uber, and Pfizer. Now, obviously, these are not going to be the only big names on the board. There's going to be other companies as well, which you can obviously find out through an earnings calendar. But in today's video, we'll just be focusing on those three with regards to stocks. Now, the impacts of the earnings call can be clearly seen from the last couple of reports we've covered. Taking by example last week's as the most recent one, we saw Facebook, or again Meta platforms, plunging by as much as 24% on the day following the release of the figures. Just so you can visualize it as well, I'll just throw the chart here so you can have a look and see the size of the drop after it reported negative earnings. This is a weekly candlestick, so if I just switch on to the daily, you can basically see this huge gap down, which is again measuring from here, which is a close, until the open. You can see the huge drop. So we can clearly see the impact of earnings. This also meant that it wiped out as much as 230 billion of Meta, which made it the biggest one-day US stock plunge in history. So again, earnings are definitely one of the reports to be looking out for if you're more of a fundamental trader as well. Now, for next week, Disney is the first one I'm going to be covering. It's expected to deliver a year-over-year increase in revenues due to the fact that they're a factor of Disney's Plus subscriber growth, as well as increased theme park traffic as countries slowly reopen their borders and start lifting some of the restrictions, the COVID-19 restrictions. I'll just throw in the chart here as well, just so you can keep an eye on it. Now, with that being said, it's always important to remember that this is simply the expected scenario, the fact that they're expected to deliver a year-over-year increase in earnings. Therefore, the actual figure could be a different story. Now, again, we have those figures just as a point of reference. It doesn't mean that's actually going to be the story when the figures are released. Now, looking at on the chart, last week Disney rose by 2.3%. If I just switch the time frame, so you can see last week it finished the week in the green. It rose by 2.3%. It's now enjoying a 2-week rally. Again, we're just pretty much retracing back from the strong dive in the prices from the previous 4 weeks. So yeah, this is with regards to Disney. Moving on, we're gonna look onto Uber. Now, just like Disney, Uber is also expected again the keyword being expected, to deliver a year-over-year increase in earnings due to higher revenues when it reports its figures next week. Now, with Uber, the factors that are expected to have boosted revenues are higher online order volumes from the delivery segment, so meaning, Uber Eats, for example, as well as the mobility segment with more ride-sharing in demand. Now, similarly to the thesis for Disney, the same applies to Uber, which is that they could have also benefited from the lifting of some restrictions in certain countries, and as more people start heading out and going to more destinations, and obviously using Uber as one of the ride-sharing companies. Now, Uber also finished last week in the green. It rose by as much as 5%. It's also enjoying a 2-week rally, but again, nothing too significant for the time being, as it's also just bouncing off of this support level here after it dipped into those levels. Now, the third and last stock we'll be covering for today is going to be Pfizer, which is an interesting one. What's worth noting is that Pfizer, it beat the earnings expectations in the last quarter by as much as 24%, which is a pretty significant figure. A key factor which could have dramatically boosted Pfizer sales in the most recent quarter is its own and its partners' BioNTech COVID-19 vaccine, namely Comirnaty. Some other major developments in the fourth quarter also include the news that the FDA extended the emergency use authorization for its booster dose to allow its use in all adults and children between the ages of 12 and 17. But not only that, the Yahoo Finance reported that the FDA granted emergency approval to the COVID-19 vaccine for children even as early as 5 years through the 11 years of age. This made it the first vaccine to be authorized in the US for this age group, again, as it was reported by Yahoo Finance. So as we can see, Pfizer has been keeping quite active in the most recent quarter. If we just look at its share price, we can see last week it just ended the week slightly in the red, but we can see it did print some kind of reaction in these levels right here, which is the 52, between the 52 and 53 mark. So with the earnings report coming out next week, it's going to be interesting to see if we'll be able to see a retest back up to the highs, which is all the way up to $61. As we can see, we've just been slowly retracing down from that level as soon as it reached it. So yeah, this is with regards to stocks, these specific 3 stocks for next week. Moving on to Forex, Monday is looking to be a little bit of a quiet day with no major economic events. And this is basically the scenario happening from Monday through Wednesday. Now, this obviously doesn't really mean that we can't see any major movements in the Forex market, but it's just simply to highlight any specific events in case some traders might be interested in. Now, things will start picking up on Thursday as we'll have inflation data coming out of the US around midday London time. And later in the evening, we'll be having the Bank of England Governor Bailey holding a speech, which again, speeches are quite important because they could rattle the markets depending on the outlook he or she provides. Again, whether it's going to be overly hawkish or overly dovish, like again, depends at the time of the release of the speech. Now, following on Friday, we'll have GDP data coming out of the UK. So things are going to start picking up on Friday as well, with the figure expected to show a decrease of 0.3% on a year-over-year basis. And later during the day, we'll be having the Fed monetary policy report coming out at 3 in the afternoon London time. Again, this is as far as the major headlines. It doesn't really mean because we won't have any major ones from Monday through Wednesday that we won't see some key actions. Because again, there could be developments that could just push markets either higher or lower. And remembering last week as well, we saw the euro dollar, it printed this a very strong rally as it ended the week by rallying as much as 300 pips. And if I just switch to the pound dollar, it had similar action as it rose for the week as well. It rose specifically by 1.05% or 140 pips. Next up, we're moving on to oil. With oil, the usual suspect is the oil inventories coming out on Wednesday. And picking up from last week, let me just pull up the chart as well. So yeah, picking up from last week, oil prices have now printed a 7 consecutive week rally, as we can see from the candlesticks here. We can see it's done that quite recently as well. So if I just move the chart a little bit to the left, you'll see it kind of had a similar situation a couple of weeks back. This was in October 2021. Now, prices are thought to have been boosted by the tightening supplies and the ongoing geopolitical tensions between Ukraine and Russia, which again is still quite uncertain as to how they will unfold. So traders focusing on the technicals will definitely be asking themselves, when is this rally going to come to an end? And when it does, and if it does, how violent is the retracement going to be? Again, if you just want to throw some indicators on it, just to have a look on the average price, for example, for the past couple of weeks, we can just throw in a moving average, adjust the settings as we've been explaining in the past couple of webinars. Again, the way to do that, you just right click onto the actual moving average and it just plots it on the chart. You can see in the top left corner the parameters you've also selected for this particular moving average, and we can see that prices are quite far off from the average, which the 21 period is at $77, and now we're nearing pretty much the $100 mark. So yeah, this is with regards to oil. And then lastly, moving on to crypto. Now in cryptocurrencies, Bitcoin continued its rebound. Let me just pull up the chart here as well. So if I switch onto the weekly time frame, we can see that it printed a second consecutive week in the green after it found some support in the around the $30,000 mark. Again, with regards to support and resistance, what I like doing is just plotting out zones instead of just a single line, because if, for example, let's just say that you decided to plot an individual line, let's say you have put it somewhere here. Now you can see like it wouldn't really make a lot of sense as to why the price is bouncing off of this area. But if we look a little bit closely, we can see that we have a little zone where the price just couldn't push through, which is like round about here. And if we just extend it to the right, we can see that we're into that zone now, which is again, it's around the $30,000 mark. So yeah, this could be one of the reasons as to why prices could have pushed slightly higher as more and more buyers were interested into that zone. And the cryptocurrency, it ended the week in the green. It rallied by more than 9%, again crossing above the $40,000 mark after it liquidated more than $50 million worth of shorts in just a matter of hours. But with all that being said, to put it into context, Bitcoin is still down by 12% on the year, or close to $6,000. If we look at the exponential moving average, again, this is the 21 period, we're trading well below it, with the RSI trading around the 43 mark. So yeah, this is pretty much with regards to the outlook for next week. I hope you enjoyed the video and you found it useful, and I'll catch you all in the next one. Until then, trade safe.